If you are currently receiving Social Security, SSI, or SSDI payments, take a moment right now and give this your full attention, because what we are about to walk through could directly affect your ability to access your own money. There is a new banking-related rule being quietly introduced across the United States, and a significant number of seniors are completely unaware that it has the potential to influence when and even how their monthly payments are received. We are not talking about something insignificant or easily dismissed. This involves the income that millions of people count on every single month to cover groceries, prescription medications, rent payments, and the basic expenses of everyday life. This is not speculation, and it is not rooted in political controversy. Financial professionals are already characterizing this as one of the most meaningful shifts affecting the relationship between benefit payments and personal bank accounts that has emerged in quite some time. So understandably, a number of important questions arise from this situation. Could your direct deposit be delayed without any advance warning? Could your bank place a temporary restriction on your account that prevents you from accessing your funds? Could newly implemented identity verification requirements hold up your access to your own money until specific conditions have been met and confirmed? These are not exaggerated or far-fetched concerns being raised for dramatic effect. These are genuine, real-world scenarios that certain individuals are already experiencing firsthand, and they are precisely the situations we are going to break down in a clear and understandable way throughout this discussion. We are going to take you through everything step by step using plain and accessible language. No complicated banking terminology, no confusing government phrasing, just straightforward explanations so you come away with a clear understanding of what is happening and what actions you can take to protect yourself and your financial stability. And if you find this information genuinely valuable, passing it along to someone in your life who relies on these benefit payments could make a real and meaningful difference for them. Now, before we go deeper into the specific details of what is changing and why, it is worth taking a moment to explain why this particular subject carries so much importance right now. Over the course of the past several months, a growing number of seniors have expressed genuine confusion and real concern about the changes they are hearing about within the broader financial system. When the rules surrounding banking and benefit payments begin to shift, it can feel deeply unsettling and overwhelming, especially when no one is stepping forward to explain things in a way that actually makes sense. So let us slow this down together and work through it carefully and thoroughly. To properly understand what is in the process of changing, we need to start by looking at how the system has historically functioned. For many years, the United States banking system has operated with a set of consumer protection safeguards that were specifically designed to protect everyday account holders, including seniors living on fixed and limited incomes. These protections were developed in the aftermath of past financial crises, banking system failures, and episodes where ordinary people found themselves suddenly unable to access the money that rightfully belonged to them. For the majority of benefit recipients, the experience was entirely predictable and consistent. Payments arrived according to the established schedule, were deposited directly into designated accounts, and were available for use without interruption or complication. That reliability provided people with a genuine sense of security and peace of mind about their financial situation. But that landscape is now in the process of evolving in ways that many people have not been made aware of. Working behind the scenes, major federal regulatory bodies, including the Federal Deposit Insurance Corporation, the Consumer Financial Protection Bureau, and the Office of the Comptroller of the Currency, have been engaged in ongoing reviews of how financial institutions manage deposits, with particular attention being paid to government-issued benefit payments like Social Security, SSI, and SSDI. These reviews and the discussions that accompany them do not typically attract news coverage or public attention. They take place in policy working groups, regulatory update processes, and internal guidance documents distributed to financial institutions. But the practical outcomes of the decisions made in those settings eventually make their presence felt in very direct and tangible ways, directly inside your personal bank account. So let us address the core question of what exactly is changing and how. In straightforward terms, banks across the country are in the process of strengthening their fraud prevention measures and account identity verification procedures. There has been a documented and significant rise in identity theft cases, fraudulent benefit claims, and unauthorized accounts that have been established with the intent of intercepting and stealing government benefit payments before they reach the intended recipients. Regulatory bodies are actively pushing financial institutions to tighten their internal controls in order to prevent and address these problems. That underlying goal is entirely reasonable and understandable given the scale of the fraud problem. However, the manner in which these tightened controls are being implemented and applied in practice is where legitimate concerns begin to emerge for ordinary account holders. In real-world application, banks now carry a greater level of responsibility for monitoring account activity patterns and verifying the identity of their customers on an ongoing basis. If something about an account appears unusual or inconsistent, whether that involves a deposit pattern that deviates from the norm, account behavior that raises questions, or customer information that is incomplete or out of date, the bank has the authority and in some cases the obligation to take action in response. That action can take several forms, including placing a temporary hold on an incoming deposit, restricting the account holder's access to their funds, or requiring the customer to complete additional identity verification steps before the money is released for use. For someone whose financial life involves multiple income sources and a cushion of savings, a situation like this might be inconvenient but ultimately manageable. But for someone whose monthly budget depends primarily or exclusively on their Social Security payment, even a delay of just a few days can cascade very quickly into genuinely serious problems. A missed rent payment, an inability to purchase necessary medications on schedule, or falling behind on essential utility bills can all happen in a very short period of time when access to expected funds is suddenly interrupted. And the concerns do not end there. Another significant factor driving these changes is the broader expansion of what the banking industry refers to as Know Your Customer requirements. These regulatory obligations require financial institutions to confirm and document the identity of their account holders and to ensure that accounts are being used in ways that are consistent with their stated purpose and the account holder's profile. For individuals who actively use online banking platforms, regularly check their email, and are comfortable navigating digital notifications and communications, updates related to these requirements may pass by without causing any significant disruption. But for a substantial number of seniors, particularly those who do not routinely monitor email accounts or who are not fully comfortable using digital tools and platforms, a verification request from their bank can easily go unnoticed or unaddressed. And when that verification request goes unanswered for a period of time, it can trigger account restrictions that affect access to deposited funds. Let us work through a realistic and illustrative example to make this more concrete. Picture someone who has maintained the same bank account consistently for many years without any problems or interruptions. Their Social Security payment arrives like clockwork on the same date every month and has done so reliably for as long as they can remember. Then one day, as part of a routine compliance update, the bank sends a communication requesting that the account holder confirm their identity information. That message, whether sent by mail, email, or through an app notification, gets missed or overlooked. Several weeks pass without a response. the account is subsequently flagged for an internal compliance review. When the next scheduled deposit arrives, it posts to the account as expected, but the account holder discovers that their access to those funds has been placed under a temporary restriction pending completion of the identity verification process. Resolving the situation requires either traveling to a branch location in person, completing the verification steps through the bank's digital platform, or working through the process by phone. Eventually, the issue gets resolved and access is restored, but not without a period of significant stress, disruption, potential delays in paying bills, and financial consequences that could have been avoided entirely with the right information in advance. Situations precisely like this one are already occurring for real people right now, and awareness is the first line of defense. At this point, many people naturally assume that existing legal protections should prevent this type of situation from happening to them, and they are not entirely wrong in that assumption. Federal law does establish meaningful protections for Social Security payments and certain other categories of federal benefit payments against garnishment in many defined circumstances. Under these protections, creditors are generally prohibited from reaching into your bank account and seizing those benefit funds to satisfy outstanding debts. But here is the critical and important distinction that many people do not fully appreciate. Those established protections apply specifically to debt collection activity and creditor garnishment. They do not govern the internal compliance and account verification reviews that banks conduct under their regulatory obligations. When a financial institution places a hold on an account for purposes of identity verification or fraud prevention screening, they are operating under an entirely separate and distinct regulatory framework. Within that framework, temporary access restrictions can and do occur while the review process is underway, regardless of the nature of the funds sitting in the account. Understanding this fundamental difference between debt collection protections and internal bank compliance procedures is critically important for anyone who depends on regular benefit payments for their financial survival. Now let us take a brief but important look at the specific situations faced by different categories of benefit recipients. For individuals receiving SSI payments, the circumstances can be particularly sensitive and the stakes particularly high. Supplemental Security Income is a program designed specifically for individuals with very limited income and minimal financial resources. Even a brief and temporary delay in accessing those funds can quickly escalate into a genuinely serious financial hardship with real consequences for daily life. For those receiving SSDI payments, there are also distinct challenges that deserve recognition. Many individuals who receive SSDI benefits do so because of health conditions or disabilities that may make it difficult or significantly more challenging to respond promptly to requests from their bank, navigate the steps required to complete a verification process, or make an in-person visit to a branch location to resolve the issue. Awareness of these particular vulnerabilities makes preparation all the more important for people in these situations. So what specific steps can you take right now to protect yourself and ensure you are as prepared as possible? Let us go through each of them carefully and thoroughly. The first step is to ensure that your bank currently has your most up-to-date and accurate contact information on file. This encompasses your current telephone number, your current mailing address, and your email address if you have and use one. The overwhelming majority of verification requests and compliance communications from banks are sent out automatically through the contact information they have on record. If your information is outdated, incomplete, or no longer accurate, there is a very real possibility that you will never receive those communications, and their absence can trigger the very account restrictions you are trying to avoid. The second step is to reach out proactively and speak directly with a representative at your bank. During that conversation, ask them specifically how they handle incoming Social Security deposits, what types of circumstances or account behaviors might trigger an internal review, and what specific steps would be required of you if a temporary hold were ever placed on your account. Take notes during that conversation and write down the information you receive so that you have it readily accessible if you ever need to reference it during a stressful situation. The third step is to consider, if it is at all financially feasible for your situation, maintaining a modest backup reserve in a separate bank account. Even a relatively small amount kept in a secondary account can provide critical financial breathing room if your primary account ever experiences a temporary restriction, giving you continued access to funds for essential expenses while the situation is being resolved. The fourth step is to make sure that important telephone numbers are stored somewhere easily accessible to you. This should include the direct customer service number for your bank, the general information line for the Social Security Administration, and the contact numbers for any other agencies or services relevant to your benefits. In a moment of frustration or stress, having quick and easy access to the right contact information can make a significant practical difference in how quickly a problem gets resolved. The fifth step is to consider if there is someone in your life that you genuinely trust, whether you might benefit from allowing that person to assist you in managing communications with your bank. If a situation arises that feels difficult or overwhelming to navigate on your own, having a trusted person who can help advocate for you and assist with the verification process can reduce the time it takes to resolve access issues considerably. Now let us address the issue of financial scams, because this is an area that demands serious attention and ongoing vigilance. Anytime there is widespread confusion or uncertainty surrounding financial systems and processes, those who seek to exploit that confusion inevitably emerge. Scammers may reach out by telephone posing as representatives of a bank or a government agency, claiming that there is an urgent problem with your account or your benefit payments, and requesting that you provide sensitive personal information immediately to resolve the issue. It is essential to remain cautious and skeptical in these situations. Legitimate financial institutions and government agencies will not contact you unexpectedly out of nowhere and ask you to provide sensitive information, such as your Social Security number, your bank account details, or your date of birth over the phone. If you receive any call of this nature that makes you feel uncertain or uncomfortable, the safest course of action is to end the call immediately and then reach out to your bank directly using the official phone number printed on the back of your bank card or on your bank statement, rather than using any number the caller may have provided. There are also established organizations that exist specifically to provide guidance and support to seniors navigating complex financial situations, including the AARP and the National Council on Aging, both of which offer educational resources and assistance. If you ever find yourself in a situation where you believe your bank has handled your account improperly or treated you unfairly, you have the right to file a formal complaint with the Consumer Financial Protection Bureau, which is the federal agency responsible for reviewing and tracking consumer complaints related to financial institutions and their practices. Now let us take a moment to offer an important and reassuring clarification. The banking-related changes we have been discussing throughout this video do not in any way affect the amount of your Social Security, SSI, or SSDI benefit payment. The dollar amount you receive each month is determined entirely by federal program rules and eligibility criteria and is not subject to being changed or reduced by your bank. The aspects of your benefit that may potentially be affected by these banking changes are the timing of when your funds become accessible and your ability to access them without interruption. That is specifically why awareness and preparation carry so much practical value in this situation. If you are someone who helps a parent, a grandparent, or another family member manage their finances and banking matters, This is an excellent and timely moment to sit down with them and review these steps together, making sure they understand what to look out for and what actions they could take if they ever encounter a problem with accessing their benefit deposits. As we bring this discussion to a close, here is what we want you to carry with you. Yes, the financial and banking system is becoming more complex and layered in its requirements. Yes, the rules and compliance expectations are continuing to evolve. But staying genuinely informed and taking a small number of straightforward precautionary steps can make a truly significant difference in your experience and your ability to protect your financial stability. There is no need for panic or alarm, but there is also no wisdom in ignoring these developments or assuming they could never affect you. Stay organized in how you manage your banking information. Stay aware of what is happening in the financial landscape that affects your benefits, and take the small and manageable steps we have outlined today so that you are in the strongest possible position to avoid larger and more disruptive problems further down the road. And if this discussion provided you with genuinely useful information and perspective, please consider sharing it with someone in your life who might benefit from hearing it. Because when it comes to protecting your financial security and ensuring continued access to the income you depend on, being informed and prepared is genuinely one of the most powerful and practical tools available to you.